Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario where we are looking for a 5-wave move to the upside in wave 1 or A, currently working on wave 2 or B, before we then expect continuation to the upside. Has to be said that this impulse to the upside doesn't look that nice because this wave 4 over here is so long in time compared to wave 2, so that is something we have to at least keep into account. And if we look towards the downside, we're looking for a WXY scenario where in wave W we were looking for a zigzag in a 535 structure, wave C going to the 0.618, which is a rare target for a wave C, wave X being an expanding flat hitting the 0.382, which is a minimum target for wave X, for then another continuation to the downside in a 3-wave structure for wave Y. Most common target for wave Y is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, sitting between 27k and 26.3k, for then potentially a very interesting long setup depending on what we see more locally, as of course you need to have your own plan and strategy to eventually enter the trades. Now if we look to the downside, you can see we have some additional confluence in this area of wave Y as well, between 26.8k and 27.4k, and some more interesting support between 26.2k and 26.5k. In the bullish scenario, the low is already in and we're going to be looking for a continuation towards the upside. So we then have a wave 1 or A finished, 3-wave structure, 2 or B finished, and then continuation. The support is the 382 over here, taken from the low to the high of wave 1 or wave A, which is a common target for wave B and a rare target for a wave 2. So if we would get an impulse to the upside, the probabilities are a little bit higher. It is a wave C instead of a wave 3. The main problem with this scenario, however, is counting this little bit of price action. In a video yesterday, the afternoon 1 p.m. video, I went into detail, but very short. Counting a 3-wave structure, if we look at the WXY, well, W or Y preferably are simple structures in a zigzag, a flat or a triangle. Well, we can't see any triangles here. It's definitely not a flat as well. So then we have to think about this being a zigzag structure and then a WXY. So inside Y, can we count a zigzag? Yeah, we can. And then a 535, but then it ends over here and not here. And taking the low of the end of a zigzag, if you're looking for a 1, 2, 3, is not allowed. Now, one could potentially think in an A, B, and then a 1, 2, 3, 4, 5, C to the downside, but then you have overlap between 4 and 1, which is not allowed for a regular impulse. It is an expanding diagonal if we talk about diagonals where you want to see overlap, but an expanding diagonal is very rare, so that is never preferred. And if we look at this whole structure being a wave C in an A, B, and then a wave C, we have the same problem as then it's a 1, 2, 3, 4, 5, but then again there's overlap between 4 and the low of 1, which is not really what you want to see. So therefore at the moment the probabilities of the low already being in are not that high, considering the fact it's quite difficult to count an ending structure because of the low we have over here. However, we always observe what happens more locally, and a good start would be taking this high. Also, if we look at the volume profile of this range over here, you can see we've been ranging for a while now on top of the value area high of the volume profile, acting as support. If this breaks, the probabilities are, well, quite high to at least go to the point of control, if not all the way down to the value area low. And the value area low is in confluence over here with the support area mentioned just now for a potential target of wave Y as well, for then potentially a typical volume profile range type of trade, where if this gets broken, then a potential backtest, continuation to the downside, find support here, and then eventually again continuation to the upside. Trade the range until it breaks, as they tend to say. If we then go to the low time frame bearish scenario, then in this scenario we're looking for that expanding flat, which is then the high of wave X, right? So we have then a bigger WX and looking for Y to the downside. So in wave X, an expanding flat where wave B hit the common target for a wave B, and also wave C very nicely respected the most common target for a wave C between the two 1.618s. Over here we had a nice area of additional confluence as well, which was the target box sitting between 30k and 30.1k, for then potentially over here a nice interesting short scenario depending on what you observe more locally. Now we have this move towards the downside, which then is the beginning of a wave Y to the downside in this particular scenario. And you also don't really want to see this high broken, because in a wave C, you're looking for a 5-wave structure, which is then finished. This is the high you want to see downside. So therefore the invalidation of this scenario is for price to take this high once again. If we go to the more bullish scenario, we're looking for an impulse towards the upside. So then wave 1 is already in, so we have this as wave 1, as this is then the low. So the invalidation of the bullish scenario is price taking this low. This is then a wave 1 to the upside, followed by a wave 2 corrective structure, for then eventually continuation to the upside in a wave 3. Now what is interesting about a bit more upside in general is that we have a triple top over here. We have high 1, high 2 and high number 3. So there must be some liquidity resting there, which is very interesting. And we have a couple of resistance areas above where we first of all found resistance over here. We have resistance between 30.4k and 30.6k, as well as 31.1k and 31.3k. And it would be nice to eventually test these. Of course, by the time we go that high, the probabilities increase for price to move to the upside. But also, if price would take this high, there is still a bearish scenario, but it's not relevant yet. If we go to the micro bullish scenario, because of course, if we are looking for upside on the low time frame, we want to see bullish structures over here on the micro time frame. Now on the 15-minute time frame where I am now, you can see that over here we counted a 5-wave structure, and then a 1, 2, 3, 4, 5, where 5 is the extended wave. That's a bit more rare. Most commonly wave 3 in an impulsive structure is the longest, biggest, strongest wave, but in an extended 5 impulsive structure over here, wave 5 is the biggest structure, and then a 1, 2, 3, 4, 5 wave count inside wave 5 to finish the bigger wave 1. In addition, the highest amount of volume is then also visible in this wave 5 over here. But what is nice is that after these few red candles also over here, we had another push to the upside on much lower volume, which gives more confidence that this is a wave 4 and then a wave 5, because a wave 5 compared to a wave 3 has less volume, unless it is extended. But the inner count, the lower degree count inside 5 works very nicely. Now, if you then look towards the downside over here, for the bullish scenario, you want this to be a 3-wave structure, and then in this case, a double zigzag on the chart, potentially going down once more, but it's quite difficult to count real nice impulses towards the downside. It looks more like a 3-wave correction and another 3-wave to the downside, potentially then creating some sort of like a W, X, and eventually a Y to the downside, where we then have a double zigzag, meaning you have a zigzag 535, eventually X, and again a 535 to the downside, or maybe even a triple zigzag really. But an interesting target is the 1 to the 1.236, where the 1-to-1 has been nicely respected, taken from the high to the low of W to the high of X, which is nice. We still have, however, some confluences around price action at the moment. We have a daily naked point of control that hasn't yet been touched, which definitely is an area of interest to me. So if price can move towards the downside and hit the daily naked point of control, it's going to be very interesting to observe the reaction at the daily naked point of control. Is it going to hold for then a bit of a move to the upside, or will it drop? Well, we have to look at volume and CVD divergences as well, which is very important locally. If we look at the more bearish scenario, we're looking for continuation to the downside. You want to see volume increasing, and you want to see at least this low being broken. Now, when we look at an impulse structure towards the downside, it is quite significant that none of the retracements that we had on the chart retraced to the 0.382, which is a rare retracement target for a wave 2. And the common targets for a wave 2 are between the 0.5 and the 0.786, which clearly haven't been hit. So all of these retracements, if you look over here, not reaching the 302, not reaching the 302, and also this one over here still not reaching the 302. So even if we're looking for an impulsive structure to the downside, you preferably want to see the 382 being hit at least once for a potential wave 2, and then a 3 to the downside. If we're thinking about impulsive structures like a 1, 2, 3, 4, 5, for example, retracement and then eventually a continuation to the downside, You do see on the 5-minute quite some three-wave structures though, and that's a bit of the thing. If we look more locally over here, looks like a three-waver sideways structure and then another three-wave structure. It's quite difficult here to count 5 waves to the downside, even if you include this price section, because then you have a 1, 2, 3, 4 overlap between 1 and 4, 5, where 5 is then too long for a diagonal. So it looks more like three-wave structures all around, and therefore it gives less confidence that we have impulsive structures to the downside. And also over here looks very much like a three-wave structure, so that's why potentially that WXY or maybe even a WXYXZ hitting that daily naked point of control is such an interesting scenario for the bullish scenario towards the upside. But as always, we have to observe the reaction and we have to check volume and CVD divergences. Now if we talk about CVD divergences, we do have a bullish CVD divergences, or had bullish CVD divergences more locally after the bounce from the low. Now these already played out as price over here took this high, which is most important. So this high over here is the target for the bullish CVD divergence, which has been taken over here, as you can see. So that's very nice indeed. And then more locally after the drop, we actually had more bullish CVD divergences between this low and the higher low created. My biggest issue here is that this drop was on such high volume compared to the low we had over here, so that gives less probabilities to this actually being the low and the CVD divergences playing out. Also more locally now, we do have some bullish CVD divergences, as you can see on the CVD chart. Higher low on price over here on yellow, lower low on the CVD. However, it has to be remembered, it is a second CVD, because the first CVD that we had more locally was the small one. So if I hide this for clarity, this was the first CVD with this low over here, and now that price retraced, it creates a second divergence with the same pivot. And the more divergences you create with the same pivot, the lower the probabilities become of that one playing out. So that is something we have to keep in mind. Now we do have news today. If we look at the news, we at 4 p.m. have high impact news, Central East European time. So make sure you trade safe around these hours. And then finally, if we look at the probabilities, it is a bit of a mix, but that is sometimes the way it is. So over here, probabilities on the medium time frame, again, it is quite difficult to count this structure as a very nice ending structure for then more bullish continuation. So the medium time frame, currently the probabilities are a bit higher for more downside. Therefore the bearish scenario on the medium time frame doesn't mean we go straight down, but it's just that the target towards the downside is definitely an area of interest in this scenario over here, or if price would create another high, X moves to the right. So currently the probabilities are higher for the medium time frame to look for a move to the downside. On the low time frame, quite neutral between the bearish ABC over here expanding flat or continuation in an impulse. It just depends on this move to the downside really and the micro. So the move down over here, as explained, it looks corrective more locally with like three-wave structures, not really a 382 retracement as well. So eventually you expect a bit of a bounce, and then depending on the bounce that you get to the upside over here, is it a three-wave, bearish CVD divergences maybe as well, or is it going to be a 5-wave structure based on some nice bullish CVD divergences? That's something I keep my eye on. And if we then look at the micro and we zoom in, then, well, as explained, we don't have a 382 retracements as well, which is something you like to see for a potential impulse to the downside, and then a 1, 2 and continuation to the downside. So currently it looks a bit more bullish just because of the structure we have to the downside over here. And that could also mean having a bounce. It could mean go to the daily naked point of control that we still have over here below, move to the upside, and then it's interesting. Are we going to create bearish CVD divergences? That would give a bit more confidence or maybe more downside. But also if we hit the daily naked point of control on lower volume compared to this candle, but bullish CVD divergences, that would be interesting as well. So we have to keep an eye on the CVD divergences, also volume. If price would move down on high volume and you again see see this type of stuff happening, of course there's not going to be any trade, or it's not going to be relevant at all. If you go and move towards the upside on high volume, well, there's not going to be a great short scenario, right? So we have to observe what price is going to do. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and see you at the next one. Bye bye.